Asian session. As you can see, the Asian session was actually ranging. So it actually pushed to the outside and then took out this liquidity. And then we now see the Asian session fell to the downside and then took out this swing low. So you can now see here that during the overlap, you can see during the overlap, we still have a continuation to the downside, because this is when the London session actually opened. You see the Asian session is actually giving us a bearish market condition. So where we actually experienced the overlap, and then during the overlap, you can see we still have the bearish markets push to the downside down to the London session. So you can see the London session actually opened here, and then we still have the continuation of price to the downside. So the Asian session is bearish, the London session is also bearish. But then you can see now we have this pullback within the London session, and then you can see there's still the continuation to the downside. So the London session is bearish. Hey guys, welcome to the NEWYORK Trading Up YouTube channel once again. So in this video, we are going to be looking at trading sessions. And basically, we know that trading session entails trading based on time zones. And we have the following three major time zones in which we traders actually utilize for our trade execution, which is actually the Asian session, the London session, and then we have the New York session. These sections actually determine the volume and volatility in the markets. We would have that the Asian session actually have relatively low volatility. The London section is actually that section that accounts for most of the global trading volumes, which also spans into the New York session. And then we have the New York and then also the London overlap. We have the Asian and then the also London overlap. But now we basically pay more attention to the London and then the New York overlap, because that is actually the session that has lots of trading volumes and volatility. So guys, I want us to basically pay attention to how I'm going to describe how to identify trading sessions and actually how to trade from trading section price delivery. So guys, do well by not skipping any parts of this video so that you can have a comprehensive understanding of what I'm about to teach in this particular video. Before we actually head to look at how to actually identify these sessions and the criteria you need to put in place in identifying this particular trading session, when you actually look at the time frames in relation to your zones, you must understand that one session out of this three sessions will be manipulated. If, for example, we have the Asian and then the London session are in a bullish move, then we are going to see that the New York session will give us actually a bearish market move. So this section could be bullish in the morning and then reverse in the afternoon. It could be bullish in the morning and then we have bullish continuation in the afternoon. After price have actually given a manipulation, we could actually have consolidation in the morning and then it trends in the afternoon. So these are what happens between these three trading sessions. So guys, let's head to the chart so that you can understand how to actually identify this trading session in expectation for a trade execution, with not just paying attention to the London session time zone in relation to your time zone, or the New York session time zone in relation to your time zone, or the Asian time zone in relation to your own time zone, but in looking at price delivery to interpret what to expect when the open of this particular different session takes place. So guys, let's head to the chart so that you can have an understanding on how to actually utilize trading sessions and actually how to execute based on trading sessions. So now guys, let's look at how to actually identify these trading sessions and what you really need to put into consideration before actually executing a trade based on this particular trading sessions that we have, the Asian session, the London session, and then the New York session, which we've already established that the Asian session is actually relatively low in volatility. And then the London session is actually where we have the global trading volume, which we have the continuation in the New York session. So what you're going to see based on what we've already established is that two of the session can be bearish, and then we expect that one of the sessions to be manipulated to lead to the reversal. Now what you're going to see is that we have the Asian session here as a bearish market condition. So you can see we're having a bearish structure to the downside here. What you can see is the Asian session is bearish, London session is bearish, but then when we came to the New York session, we're going to see that the New York session is giving us a bullish market condition. Just the way we established that one session would be manipulated. If Asian and London session is actually bullish move, then we should expect that the New York will give us a bearish move. So these sessions could have a bullish section in the morning, and then we have reversal in the afternoon. We could also have bullish in the morning and then bullish continuation in the afternoon after price has given a manipulation. We could have consolidation in the morning and then it trends in the afternoon. So I established that with you guys earlier. So now let's look at this chart example to see this things. Now you can see the Asian session is actually bearish. Now what you're going to see during the Asian session and the London session overlap is that you can see the tendency of price pushing to the upside to come raid the Asian session high points. So price would grab the buy side liquidity of the Asian session, and then we can see further push of price to the downside. Since what you can see here, we have the break of structure, price push to the upside, and then we have the rate of the Asian session high. And then now we can see that now price push further to the downside, and then you can see what we have here is actually a break in market structure. So we have the break in market structure to the downside also during the London session. So price broke structure to the downside. So the Asian session is bearish, the London session is bearish. We had the manipulation of price to cast the Asian high, and then price further fell to the downside, broke structure to the downside. So you can see we have two sessions as a bearish market structure. So what we are going to expect during the New York session is to anticipate the New York session to give us a reversal. So you can now see that during the London and then the New York overlap period, you can see that we have a push of price to the upside, which is actually what we should be expecting. And then price should raid the buy side liquidity of the London session. And then we can now see price force to the downside to come raid the external range liquidity. So we would see that price would now raid the London section external range liquidity. We could possibly see a candle body close below, or we could just see a wick close below the London session low points. And then you can now see that the New York session will give us the bullish market condition. So when two sessions are actually bearish, we expect one to be bullish. When two sections are bullish, we should expect one of the session to be bearish. So now you can now see that price during the London session gave us a bullish market condition, and we have now a change in market character here. We're actually going to look at the real-time chart example so that you can see how these things work. So we now have a change in market character here. So in the condition whereby you have that the market is pushing to the downside, so what we are going to see, the rate of the Asian high is going to be a candle wick raiding the Asian high points, and then we have the fall of price to the downside. But in the condition whereby you see the candle body closed above this high, then you must pay attention to the possibility of a zone slightly above the Asian session high points, where we'll see that price possibly came to mitigate a sponsorship candle resting slightly above the Asian session high points. So that does not mean you have a change in market character. So once you're trying to identify trading session, you must also pay attention to the higher time frame structure. So now you can now see that we could have a candle wick just read the Asian session high points, and then would expect the fall of price to the downside to come take the Asian session sell side liquidity. Or you could see that the candle body would close above this session. That doesn't mean we have a change in market character. So you have to pay attention, just the way I've said, to possible sponsorship zone slightly above the high of a particular trading session. So then you can see that the candle would close above, but yet we should expect what? The fall of price to the downside. I possibly wait for a single order block candle to be formed. And then we now expect the fall of price to the downside. So now you can now see that now we have price pull back, created the inducement, and then further fell to the downside during the London session. So during the London session and then the New York section overlap, we could expect the possibility of price pushing to the upside to raid this inducement, and then we have the fall of price to the downside. So during the New York session, we would see that price now will sweep the London session with either a weak, or we could also still see a candle body close. But the fact that we have established that the Asian session and the London session is giving us a bearish market condition. What we should anticipate in the New York session, even if we have a candle body closing below the low of the London session, we should still expect a reversal. We should still expect this should be a manipulation that is going to lead to the reversal in the New York session. So this is what you should be anticipating and paying attention to. So in the condition again, where possibly we have the Asian session is actually bearish, and then we're possibly expecting to see more bearish move to the downside. But then what you're going to see is that during the London session, we're going to have a reversal. So there is the possibility that this is what is existing, that in the higher time frame, you're actually having a bullish market condition. So what price did during the London session is to actually mitigate the higher time frame zone, and then you can now see we would now have the reversal. So meaning the Asian session gave us a bearish market condition, but then the London session is now going to give us a bullish market condition. So what we are going to expect also during the New York session is to see the continuation of that price to the upside, because we have already the Asian session give us the bearish condition. So we should expect this sessions to give us the bullish market condition. So these are things you must put into consideration. So we are going to check the real-time chart example so that you can actually see how these things work, and then how you can apply them during your trading, and then how you can also see that you utilize trading sessions like the London session and then the New York session that actually have high volatility and volume. So guys, let's head to the chart to look at real-time chart examples. So guys, here in the chart, you're going to actually see that we have our trading sessions identified here. You can see from this particular red line to this red line is where we have actually the Asian session. And then from this particular blue line to the red line is where we have the Asian and the London session overlap. And then from this particular blue line to this particular blue line is where we have the London session. Then from this particular orange line that we see here to this particular blue line is where we have the London and then the New York session overlap. And then from the orange line to this particular orange line here is the New York session. So just the way we have established that when two sections are bearish or bullish, we expect the other one to be a reversal in the markets. So you can see my time is actually set to the New York time. And then I'm going to further show us examples where we're going to be using the session indicator. You're going to see the name on the screen. So you can do well to also check the TradingView platform to apply that indicator to your trading platform for you to actually understand the identification of sessions. So guys, if you're also new to this YouTube channel and you're actually gaining value from this video and wish to be part of this community, then you can do well to click on the subscribe button to be part of this community. Also like and share our videos. If you have questions, you can post your questions in the comment section and I'll look forward to addressing your questions. So now you can see here, we actually have the Asian session. Whereas you can see the Asian session was actually ranging. So it actually pushed to the outside and then took out this liquidity. And then we now see the Asian session fell to the downside and then took out this swing low. So you can now see here that during the overlap, you can see during the overlap, we still have a continuation to the downside, because this is when the London session actually opened. You see the Asian session is actually giving us a bearish market condition. So when we actually experience the overlap, and then during the overlap, you can see we still have the bearish markets push to the downside down to the London session. So you can see the London session actually opened here, and then we still have the continuation of price to the downside. So the Asian session is bearish, the London session is also bearish. But then you can see now we have this pullback within the London session, and then you can see there's still the continuation to the downside. So the London session is bearish, as we have the Asian session also bearish. Price took out this buy side liquidity, fall to the downside. The London session sponsored the move to also take out this buy side liquidity, and then you can see the further push of price to the downside. So we have two sessions as bearish. So you can now see that during the New York session open, this is the New York session open by 9 a.m., the New York session open. You can see what we have is that now price during the overlap, price still fell to the downside. And then you can now see price swept the low that the London session created. You can see we have the sweep of that low point. So price swept the low created during the London session. And then you can now see we have what? The push of price to the upside. So you can see Asian session is bearish, London session is bearish. During the overlap, we have price pushed to the downside, swept the London session low points, and then you can see we have the New York session give us the reversal to the upside, and then you can see price has been what? Bullish after this reversal at this point. Now we have what? The change in market character here. So guys, I'm going to show us more example using the trading session indicator so that you can also see these things clearly and also further have understanding on how to apply these trading sessions. So guys, let's head to the chart to look at the example. We've already installed trading session indicator. So guys, let's look at this example with the already installed session indicator. The name of the session indicator is actually Lux Aglo. This is the name here, Lux Aglo. When you go to the trading view platform, you go to the indicator session, you can just search for Lux Aglo and then you impute that, you install that into your trading view interface, and then you're going to see it appear. You can actually decide to make settings to suit how you want it to suit your view. So guys, you're going to see it's going to give you the Asian session, the London session, and then the New York session. So you can now see from this particular example, we are having the Asian session giving us a bearish market condition to the downside. Now you can see here we have the London session and then the Asian session overlap. This is where we have the close of the Asian session, and then we have the open of the London session here. So this is what we call overlap. When the open of the London session is still within the time period of the Asian session. The Asian session is not yet closed. So the London session opened, and then that is when we're experiencing the overlap. So now you can see during overlap, we tend to have more volatility in the market. So you can now see during the overlap, we still have for the push of price to the downside. But now what you can see is that during the London session, we have a bullish market condition. Now you can now see we have the open of the New York session here. By 9 a.m. we have the open of the New York session. So you can see this is the London and then the New York session overlap, because this is where we have the close of the London session. We have the open of the London session here. So we have the overlap period from here to this particular place here. So what we can now see is that during the London session, we actually have a bullish move to the upside. The Asian session actually gave us fall of price to the downside. During the overlap, we have this momentum movement to the downside further. But then you can see now we have this movement, which is actually bullish within the London session. So you can see Asian session gave us bearish, London session is giving us a bullish market condition. So now you can now see, we now see price drop again further to the downside during the New York session. Now what we have is price return to mitigate this particular order flow resting here. And then you can now see price fell to the downside. We have this momentum movement to the downside. London session gave us return to mitigate, and then the New York session further gave us a bearish market condition to the downside. So what you're going to see is that the Asian session is bearish, the New York session is bearish, then the London session gave us the bullish market move. That is why we stressed that one of the session is going to be manipulated. When we have two bullish, we expect to have one to be bearish. When we have two bearish, we expect to see one is what's bullish in condition. We can have consolidation, and then we can now see price gives us trends in the afternoon. So basically, we have more of consolidation in the Asian session. So now I'm going to still show us another example so that we can see how you can actually trade off from session time periods. So guys, you must understand, just the way I've stated earlier, that you must also pay attention to the higher time frame sponsorship zones in order to actually effectively utilize the concept of trading during trading sessions. So guys, let's now look at another chart example so that you can really understand how to trade using trading sessions. So guys, you can now also look at this example. Here we have the Asian session. I can see we have more of a bearish market condition, which actually looks like a ranging market condition also. So we have the Asian range here. And then now you can see we have what, meaning this is our accumulation. And then you can see price pushed to the downside. This is manipulation because price broke through this Asian session zone, and then you see price fell to the downside. So price dropped to the downside, grab all sell side liquidity, and then you can now see we have this distribution to the upside. So this is what is taught in ICT as the power of three. So we have the accumulation, now we have the manipulation because price pushed to the downside, took out to the slow point, but yet price gave movements back to the upside. So we have accumulation, manipulation, and then we have distribution. So you can see now in the Asian session is when we have the accumulation. Yeah. So you can see that the movement looks bearish in condition. Now you can now see during the London session, we are now having a bullish market condition. And then during the New York, we now have a bearish market condition. So what you can see is that we have bearish in the Asian session, bearish in the New York session, but then we have bullish market condition in the London session. So this is just the simple thing I just want to show you guys in identifying session. I'm not showing you guys how to mark out from a higher time frame and possibly try to interpret what happened for price to actually reverse to be bullish in this condition when you're actually having a fall of price to the downside. Just to give you the simple means in identifying trading session. Maybe in coming videos, we'll look into that deeply. So guys, if you're new to this YouTube channel and you gain value from this particular trading session video, you can do well to subscribe to our YouTube channel. Also like and share our videos. So guys, God bless you and cheers.